We're here at Money 2020 Bangkok, and I'm delighted to be having a fireside chat with Phil. Would you like to introduce yourself, Phil?
Absolutely, yeah. Hi, my name's Phil Pomford. I'm the General Manager for the Worldpay business based in Singapore. And so, yeah, great to be here. Thank you.
Thank you very much. So we've just dragged you away from being on stage, talking about QR codes and the impact that's going to have on the payments industry. Could you just give us a little bit of an insight into where you see the impact?
Yeah, absolutely. So the discussion was very much around sort of where QR has been successful, where it's been not successful, what the push factor, the pull factor, etc. So, when we talk about QRs in this region, I think the first thing to say is QR is not new. You look at China, I think there was something like 7.5 trillion transactions just last year, which Alipay and WeChat, roughly 90% of that was sort of through QR-based payments, so it's not new at all. What we are seeing in the region, though, is different levels of speed and growth. You look at India through UPI, obviously that's been in place now since about 2016, very successful. One of the nuances there and what it makes it really successful is it's the cross-border ability. They have deals in place with 25 countries, including the EU as well. So that ability to be able to sort of transact cross-border, really important. We then look into Southeast Asia, where obviously we're based. QR is prevalent pretty much in all the markets, including where we are today, but also in Singapore as well. So I think we've seen that real growth in it. And if you're a merchant, from a merchant perspective, it's simple, right? It's simple to be able to accept and receive and work with a QR code. It's instant, and obviously it's very, very low cost. So I think with that in place, there's a real drive to continue down that.
Okay, and obviously it's very prevalent in Asia, but do you see that expanding out globally and beyond the Asia region?
It's interesting. So again, in the global payment report, we talk about a lot of the card-dominant markets that exist.
Right.
And, no surprises, the likes of the US, the UK, Australia, still very, very heavy card markets. And talk about the reasons for that as well. And so, if you think about how the card value proposition is set up, behind the card ultimately is a consumer protection, purchase protection, so that exists, and that's something people like. The other a key part of the card portfolio as well, or the value prop I should say, is around loyalty and loyalty rewards, and
right.
Certainly someone of my age is very much still interested in that, and so while that exists, that is a real rationale why cards remain strong. And it's interesting, we talk about digital wallets in the report being the absolute number one payment method around the world. Now most wallets have a card sat behind them. US, between credit and debit, about 65% of transactions actually a card transaction, but behind the convenience of the wallet. And so it's by no means saying card has gone away. Card is still dominant in those markets and will remain so for quite some time, I think.
Okay. And do you see it sounds like an account-to-account type transaction. You talk about that in your global report, is that?
Yeah, account to account. So again, differing speeds, and where account to account has been successful, using the real-time payment rails, etc. It's where the government has got behind it, and governments are getting behind this because financial inclusion is critical in many places. Again, especially in Southeast Asia, but globally. Also, as well, where that user experience is really simple. In some markets, whilst the government's got behind it, for example, in Australia, some of the complaints are more around the user experience not being great. You look at the biggest markets for account to account, Brazil, India, again, Singapore is growing significantly as well. And one of the things the report talks about with Brazil is that by 2027, 50% of all e-commerce transactions will be by account to account. So, again, significant growth. And for merchants who are accepting account to account, again, it's quick, it's easy, it's cheap, it's seamless, and that's kind of a critical point.
Do you think the mechanism's going to always be phone, camera? Is it going to be where's the future going?
I think just given the fact that the phone is such a form point, we just take it out of our hands a moment ago, but the phone is such a part of our lives. I think when you then think about the digital wallets, you think about innovation around, we talked about super apps for a long time, but actually what we're starting to see globally, and I just at an event earlier where they talked about this, is the average number of apps on people's phones are actually going down.
Right.
Because people are gravitating towards apps that actually give you multiple capabilities within that app. So I think it's very hard to say that it's going to move away from that, because it's the mobile is ultimately the device. It allows that security layer. And again, if you think about a consumer, they want simplicity, but they also want trust. They want to be able to trust that. And I think when someone trusts the biometrics on their phone, for example, that is a great platform for something to continue growing. So.
Perfect. Well, thank you very much. It's been great chatting with you. I know you've got a busy schedule, so enjoy the rest of the conference.
Thank
and
you.
Best of luck to Liverpool in the push.
Absolutely.
Who's going to win? Who's going to win the league?
Big game tonight. Arsenal.
Arsenal. You heard it here first. Thank you.